Good evening. Ira Epstein, and here we are with your financial market wrap-up. And this wrap-up is for the evening, as we're here now on Thursday, the 14th of November, 2024, just getting on to 7 p.m. Central Time. Now, it was an interesting day. The market had absorbed everything. We were trying to get short covering rallies going in the metal markets. Copper had come well off its low of $4 and come all the way back to about unchanged to higher on the day, believe it or not. And you were up 285 in the gold. And at that time, I'm going after 2 o'clock, might have been 2:30 or something. The news wires broke what Fed Chair Powell had said in Dallas as he was supposed to speak at a moderator event. It hadn't hit earlier. I heard that he was going to speak at 11, but it was about 3 that this all happened, 2:30 something. And the first thing that I read, and I write about it tonight, so it's all in my written update. The Fed's in no hurry to cut interest rates. That's all I had to see, and I knew what was going to happen. Because the market is anticipating Fed cutting rates, Trump win, radical changes, cutting of expenses, tariffs going on, blah, blah, and now you throw this in there. We're overdue anyways, all right? If you think about it, you're 8 days from the date, last Wednesday, not yesterday, a week ago Wednesday, when President-elect Trump was announced. The market is run almost vertically in a number of markets, be it up or down, bonds down, other markets up, and you've been watching all this happen. We've had PPI, CPI numbers that have not broken down the inflation story. We got today unemployment claims, and they're at a 5, actually for the past 5 reports, we have had stronger market, not weaker. In other words, not as many claims, and the numbers that came in today, I think, were a 5-month low. So you're really seeing a labor market that's not falling apart. And in the comments that the Fed chair had, he said, you know something? It's remarkable how strong, and I want to use the word remarkable in quotes because it was in quotes in the write-ups that came. How strong labor has been. We are at that point in inflation where it's sticky, it's a bumpy road. They believe that it will go down to the 2%, but it takes time as the restrictive interest rates have to work on the market. And that was when he said, it's not a race. And boom, you pulled the plug. So I happen to think you're bottoming now in the gold and silver. Not to be bullish, but this is where the market's going to see the profit taking and the lack of new selling coming in. That's all that I'm saying on it. In the stock indices, you're ripe for a break. And you're probably getting it now. Bonds and notes, I don't think that they have rally power of any size, if that's the statement from the Fed. Doesn't mean they have to go down a lot more, but they're going to want to see reports. And mentioning of reports to you, tomorrow, let's see what we've got here. Yeah, there we go. I can bring it up. We get advanced retail sales data at 7:30. The New York Empire Manufacturing Survey for November at 7:30. October Import-Export Price Index data at 7:30. Retail sales number at 7:30. Then we get a little bit of a break. You can run to the bathroom and come back because at 8:15, you're going to get the monthly industrial production and capacity utilization numbers out of the Fed. You can go to the bathroom again. 9 o'clock, you get business inventories. And for the grain traders, you're going to get the crush numbers at 11. Whoa. Lot to write about, lot to do in the marketplace, and that's going to take up some time. There's no question about it. So let's go to the market and see why I'm saying what I am. You're down about a percentage point for the week in the stock indices on a closing basis. Got it? And the support's still back at the 56.88 level. That'll climb next week as this market moves on. When we take, that's because you drop one of the 18 weeks ago number and replace it with this one. When you look at the S&P, you can see the market is suddenly stalling out here. And when you add the swing line, you've now got suddenly lower highs, lower lows. So my reason for making my statement is up until this point, you've had a vertical price rise. And now the market's starting to give you that stepping ladder to the downside. Maybe it wants to go back into the 18-day moving average, not weekly, daily. And that's around the 5,900 level, as you can see. You're peaking out against the upper Bollinger Band, as I tell you, traders, I get people write me, should I buy against that? I go, no, that's the exact spot I'd be telling you to come out against. And that's what's starting to happen. And momentum's turning down. Now, you could have gotten some embedded readings out of some of the stock indices today. They're getting themselves to the point where they got overbought and they're losing them right across the board. Same thing going on in the NASDAQ, same pattern. Lower highs, lower lows. So it's one thing to say to you, I think the longs are coming out. It'd be a very different thing to say, oh, get bearish here, look for the market to go crashing down. No. Would I love to see it make a move to the 18-day average of closes or thereabouts? Yes. Same thing in the Dow. You came up and now not getting that embedded reading. Again, you peaked out against the Bollinger Band. If these numbers weren't there, you'd wonder, why did it stop there? And I keep teaching you this. Go to our Enhanced Bollinger Band course, iraepstein.com, the Enhanced Bollinger Band course on the site. It's right there for you to take. Same thing in the Russell. You actually got over the band, tried to run it a little further, and this is the one that's most likely going to come down first to that 18-day average. That would be my bet on it, all right, that it's going to get there and try to hold. Then in the bonds and the notes, as much as they tried today, they couldn't stay up with that piece of news. I mean, you got the head guy saying we're in no hurry to cut rates. People thought maybe, all right, this data, the Fed will look through it. I don't know what they're going to do now. I want to see in the morning, I'm going to run when the traders are all back in form. What did they do today on the numbers? Are they down to a 60 percentile, 70 percentile? In hearing that, I don't know. We came in at 83 percentile for a cut in December. I'd feel pretty secure that they've lost some of that. You can go to the CME FedWatch page at google.com and take a look at it. Just go to Google and CME FedWatch page. I don't know why I said .com. Lower highs, lower lows. Now, are we embedding here in the 5 years? So let's see. You can't count today because we don't know where Friday's going to close. Both numbers were under 20. Both were under 20 on Wednesday, and lo and behold, both under 20. You're fully embedded, which means what I said. When you get that, the rallies get sold in the market until the red line closes back over 21. So you're just pushing this market into higher and higher rates. That's supportive to the dollar. Now we're at the point where the dollar just opened. It opened up about 18 points higher than where it finished. I think it's going to try to roll over. Now, when I say roll over, try to back off a little bit here. When we look at the slow stochastics, again, you can't count tonight. But let's go to Thursday, both numbers over 80. Let's go to Wednesday, both over 80, but just barely, and not that way on Tuesday. So this is the key time. I will be surprised if you embed. All right? I'm not bearish, don't get me wrong, but it acts like a market that doesn't want to do too much more. What else am I looking at? I'm looking at 1, 2, 3, 4. Tomorrow would be the 5th day over the Bollinger Band. You can count on your hand. Go back and tell me in dollar index in a year how many times it gets beyond 5. It's very, very rare. So the market, the way this is going to work, it's going to move to the right. Is that a bear sign? It is not a bear sign. It is a sign that you're overdone and the market's going to start running out of momentum to the upside and slip a bit in the marketplace. That's what I'm expecting. The flip-flop is true in the euro, which is not embedding yet, but it's the same thing. Now, the euro today got itself down to the 105 and a fraction level. I mean, if you take a look, and we should, the low today was 105.08 and a half. We were just talking every night that I've been with you here. We've been talking, would the market make the first number that we had targeted, the 105 level? For all purposes you can go through it. There's no magic there. But this is where I think a lot of the chartists are saying, Okay, let's see if we can get a bounce in the market, get an embedded reading if you could, and then get more aggressive on the sell side. The British pound, you've got 1, 2, 3. Today could be the fourth day of under the Bollinger Band. It paid no attention to the support level of the 200-day average in the Bollinger Band. I mean, none. That's not common. So it's even a more bearish looking chart than I would have thought. In November, micro Bitcoin, I'd be a bit cautious here, but it's still a buy. You heard the word fall out of my mouth. Why? You have an embedded reading. And this is the first reasonable break. So I think the trade will nibble at the long side here, thinking they can get it back up towards that Bollinger Band. If they lose the Bollinger Band, they'll come out of the market, in my opinion. Doesn't mean I'm right. In the Brent crude, lower highs, lower lows. You know, I look at momentum all the time because momentum, I believe momentum leads price. Price doesn't lead momentum on charts. And what you've got here is a market looking for a correction, but you've established the bear trend in the Brent. I'm looking for resistance at 73.33. Certainly doesn't help anything if the dollar stays relatively strong to all other currencies as they come down, because universally, oil is priced in dollars. Now, we know that Russia trades with Iran, Russia trades with China, and they get rid of the dollar in that. The BRICS are trying to form their own way to get around the SWIFT system. We'll see what President-elect Trump has to say about stopping that, if he can. I don't even know. In WTI, not quite the same pattern. Higher high, lower low, sort of meandering around. Heating oil, how many days you need me to keep telling you? It is fighting now for direction against the 18-day average of closes. And you know I've been looking for a top to form in natural gas. You're not there yet, but you're certainly saying, and the market's rejecting staying higher. So if you like what I do here, you're probably going to like a lot in the free offers that we have, because you get the price counts I so often refer to. Seasonality, yes. I'm working with the group Season X. I'm going to be putting them in here next week is my goal, as one of their free offers that you'll be able to get. And then you'll get a discount when you first sign up from them through us. It's got to come through our link. I've just hooked up with them. Love their charting service. I use it all the time now and staying there. Free access to the Linn platform. You want to try the charts I have out? I think they'll blow away what you have. It's really simple. We'll be happy to give you a free offer if you haven't tried it before. We also have the price counts that you can get and the charting service that one is on. So we have different ways. Just go in here, read the different offers, click away on the blue. When you make a click on the blue, it'll go into a cart. At the bottom of the page will be where you put in your name, your email address. If you have a message for us, put it in there, and we will get this out to you in short order. I'm Ira Epstein. I'll see you first thing in the morning. You take care.